Welcome to First Issues. In the wise words of the late basketball legend Kobe Bryant, great things come from hard work and perseverance. No excuses. And no truer words have ever been spoken as we have a look at the First National Bank of Botswana's financial results for the full-year period ended 30 June 2024. In an environment of heightened wars for talent, payment capability changes and reduced economic activity, the bank reported a 25% increase in profits to 1.8 billion bula, coupled with a return on equity of 35.5% and a dividend per share of 43 thebe. The more than 700,000 customers at the bank are served at 25 branches countrywide by over 1,600 employees. These capable individuals follow the Vision 2025 strategy that stands on 5 pillars: solutionist people, operational efficiencies, customer centricity, value protection, and shared value, the outcomes of which are these astonishing results. The team is led by Chief Executive Officer Stephen Bogatsu and Lead Bookkeeper Chief Financial Officer Dr. Mbago. We unpack these results first with the CEO. Steve, thank you so much for coming on First Issues and affording us your time. We're here to disgorge the Fnb's full-year results for the period ended 30 June 2024, right? Stupendous results, as always. Please take us through the strategy that led to this 24% increase in the bottom line.
If you look at our balance sheet, or how we approach our balance sheet, is based on 3 segments. The retail segment, which grew by about 11%, and the focus there had really been to navigate the challenges associated with the current environment. So to not grow too aggressively on the retail space, because we are aware that with rising inflation, with job losses that some of our customers have had to contend with, there will be very little opportunity for us to extend credit. So it grew by only about 11%. The second segment, which is the commercial segment, where the SMEs are housed, grew by about 16%. Now, this really is exciting for us because we know that various efforts have been put in place before to try and stimulate economic activity and diversify the economy away from minerals. And lastly, the corporate segment, precisely because of the various activities in construction, in agriculture, in trade, that particular segment, the corporate segment, has grown by about 20%. So very, very pleasing results indeed. If you go to the income statement, we also see that translation of the balance sheet into the income statement. We also experienced growth in volumes around a number of the platforms that we are offering and the products that we are offering. When you look at things like Cash Plus agencies, the e-wallets, we have seen significant growth in some of these spaces. All this translating to a profit before tax growth of 25%, which is about 1.8 billion. So pleased with the results.
Very pleasing indeed. But let us talk about this here a bit. Checks were a solution, or a financial solution, a payment solution for decades, and they were phased out in December of 2023, right? So how has the bank managed to bridge that gap for its customers? Is there a solution?
So a number of customers, both in the public sector as well as in the private sector, were used to these checks. We started exploring solutions that we can put on the market a couple of months way before the stoppage of the checks on the 31st, the discontinuation of the checks on the 31st of December. And one of the products that we actually introduced is what we call eWallet Pro. That enables a corporate or a local government to pay multiple recipients just at the touch of a button.
Botswana's gross domestic product contracted by about 5.3% in the first quarter of 2024, comparable to a growth of the same number or of the same magnitude in the same period in 2023, right? How do you think that contraction in economic activity has affected the bank, if at all?
So the translation of GDP to the rest of the economy usually takes a while, and in the banking industry it lags quite a bit. So for this particular financial year that we were in, we had not yet seen the full impact of that translation to our results. However, we expect that going forward, if the economy is going to contract like you have indicated, some of the negative aspects that we only saw in part of our financial year may begin to show in the 12 months to this financial year to end in 30th of June 2025. Therefore, we expect that consumers are going to be under pressure. When consumers are under pressure, we expect that the retail segment is going to be impacted from a loan perspective. So we should not expect the kind of growth we have seen in 2024 to happen in 2025. Number two, we expect that the commercial sector as well will be impacted owing to the various challenges that are facing the economy right now. And when all that happens, it impacts the balance sheet. When it impacts the balance sheet, it will also impact the NIR. So we expect that NIR is going to be impacted. We expect that impairments are going to be impacted because if people's ability to service their financial obligations are impacted by various factors of the economy, we expect that our impairments will rise sharply. So that is the impact that we're expecting in the next couple of months, which we may have already seen now.
There's an initiative that the bank is very passionate about at the moment, which is the Shared Value Initiative or Shared Prosperity. Let us talk some more on that. Last time we were talking about the donation of the library in Moshopa. There was an aquaponics donation farm at the prison in Village. So what more has the bank done in that regard since then?
Our approach to shared value is more than just donations to various communities, such as the donations that you are referring to, which are done through the Fnbb Foundation. There are other aspects of doing business which we believe result in shared prosperity for all in the communities that we operate in. So some of the things that we introduced a couple of years ago include, from a procurement perspective, that we want to increase or to do more business with businesses established in Botswana. So at the moment, 95% of our procurement spend goes to businesses that are in Botswana, and the focus this past year and going forward is actually on businesses owned by young people as well as businesses owned by women. That is the impact that we believe is more meaningful than just donations. The second aspect of that shared value journey of ours is actually leveraging off our balance sheet to say, how many businesses, how many citizen-owned businesses can we support by taking slightly more risk than we would otherwise take under normal circumstances. And we have carved a part of our balance sheet where we are assisting SMEs, we are assisting the very sectors of the population or the community that I indicated, young people as well as women, in order to ensure that we are playing meaningfully to their development and to their growth. So those are some of the initiatives that we are looking at. There are other initiatives around sustainability, other initiatives around ESG. Despite the fact that we know that the margins are low, we have said we need to impact the environment positively by raising capital, which will be consumed by the segments at very marginal rates. So we have seen the likes of a solar power that is being built around the Slibe Pikwe area, which was financed by the bank. So those are some of the initiatives that we have been embarking on.
Well, in the end, Steve, what is the future looking like? I know that Strategy 2025 is coming to a close.
For the last lap of our strategy, we have reflected and realized that there are a number of products and services that we have introduced in the last 4 or 5 years. It is now time to package all these in a manner that ensures that our customers experience us as simple, but giving them some kind of wow experience. So we are focusing the last couple of months of our Strategy 2025, just making sure that we are packaging to be impactful to our customers. We are removing the angst from our customers that is occasioned by things like KYC, things like when you have to open a business account and you spend about 4 hours in the branch. We need to reduce that or improve that experience so that our impact on our customers can be a wow.